Welcome back to New Orleans and welcome back to the Gold Newsletter. My name is Kai Hoffmann. I'm the JR Mining Guy on Twitter and the CEO of the Silver Financial Group. Thank you so much for joining us here for a company, pretty much of an introduction and a company update, of course. I'm joined by Andrew Pollard. He's president and CEO of Blackrock Silver. Andrew, it's great to see you. It's good to see you in person.
Yeah, I was just going to say that. Yeah, it's great to be here in New Orleans. First time I've been back since COVID. So, man, the city's alive and vibrant.
Absolutely. It's really busy, even on a Tuesday, Wednesday night. It's busy out there.
It really is. Yeah, you should see the amount of beads I got last night.
No. No, but Andrew, first time on the Gold Newsletter channel now. Let's start with a bit of an introduction real quick. Give us the 60-second, the high-level overview, and then we'll dive into some of the specifics.
Sure. Well, listen, Blackrock's after high-grade opportunities in the silver state of Nevada. About 3 years ago, we took over one of the most famous silver discoveries down there called the Tonopah Silver District, which was really, really consequential during the early 1900s. It was really the last sort of gold rush, prior to World War I, but by the Great Depression, it had, been put to bed effectively when metals prices tanked. We're the first group to go back, consolidate the district. We put our first drill hole in the project 3 years ago. We're now backstopped by 100 million silver equivalent ounces at the highest grades of any undeveloped silver project globally for as large projects go. So yeah, we're making quick work. We see big potential for this. The grade profile's amazing. It's just gold and silver. You process it, you're left with that and beach sand. So it's a really, really unique deposit right off a highway in Nevada.
Fantastic. I'll follow up with a few more questions here in a minute, but to get everybody on the same level, can you catch us up on the cap structure as well of the company?
Yeah. So we're pushing about 200 million shares out. Today's actually a good day for me because we just had 4.5 million warrants fall off our registry. Would have been nice to have those exercised, but those are about 7 or 8 times our share price right now. So either way, we're tightening up in one way or another. About $60 million market cap day to day as we stand.
How much cash do you have left? Any big shareholders in?
Oh yeah, well we got tons of big shareholders. I mean, I took over the company 4 years ago. It was $1 million market cap and 3 cents, and it wasn't circling the gutter, it was down the drain. Since then I've raised $50-60 million and brought in some big investors like First Majestic Silver. We're in the SIL ETF. Eric Sprott's obviously one of our largest shareholders, and we've got a good institutional roster. In terms of cash right now, we're sitting on just under about $1 million Canadian, which doesn't sound like a lot, but we're not drilling right now, and coming from our origins, that's a lot of money for us. So, we're just waiting this market out. This is the last tax loss season of this rate hike environment, so enjoy the eating while the eating is good here, but I think we're going to aim to hit the ground running in Q1, Q2 and get the drills back and do one final push before we roll into a PEA.
Yeah, some good commentary there. You mentioned you just put out a resource. I think it was big news, 100 million ounces silver equivalent. Break that one down for us, the resource.
Yeah, well, we put out our maiden resource back about a year and a half ago, and that was about 42 million ounces at really, really high grade. So it established the credentials for the project, but I think at the time people thought it was just too small to care, or they thought that maybe it would grow incrementally. Maybe it'll only top out at 60 million or 70 million ounces, and is that really enough to build a mill? We nearly tripled our resource in about a year and a half. We just put it out at the beginning of October. This is our second resource, and we got 6 million tons, grading just under 3 grams gold and just under 250 grams silver for 100 million silver equivalent ounces. So, the grade profile, even if you just looked at it on the silver grade profile and got rid of all the gold, we'd still be the 4th highest grade silver project in the industry. When you put the gold byproduct credit in, easily head and shoulders above everyone else on a large project basis. And we actually present on a block diluted grade. So we actually factor in dilution into our resource, whereas a lot of companies present undiluted, which is a way to jack up the grade and the ounces.
Interesting. What was the resource based on? How much drilling has gone into it? How much work have you put into it?
Yeah, in the last 2, the resource is based on about 125,000 meters of drilling. When we got the project, it's a brownfield district, but the old timers in those days didn't do any drilling. They just mined. So we literally inherited, I think there was 1 drill hole in our database. Since then, we've become one of the most active silver exploration projects globally. A total of 150,000 meters all in. I think 125 of that made it into this resource. But we're finally connecting the dots. I think on our first resource, the maiden area, people thought that, there's no upside. We've capped it. It's not going to get much bigger. This resource is based on a huge step out we did after our maiden one last year, where we stepped out a further 1.8 kilometers, I think it was, from where the last resource left off. And all of a sudden now it's like boom, boom, boom. We've got a mineralized vein corridor which we've tracked over 3 kilometers from where the old timers left off. So the way we did this resource is it's got 3 deposit areas in it, but it's not really 3 deposits. You know, the last real push for us on the drills, probably next year or whenever it makes sense to do it, is to just infill the gaps between these deposit areas. So instead of having 3 areas, it's one big system, and then it'll be really straightforward to develop a mine plan around and wrap some economics on.
On Wednesday, we hosted a mining 101 panel together with Brent Cook and Brien Lundin, and we prepared a checklist for investors to run through and maybe go take to the companies. And one of the questions is ask the companies, what is the size of the prize and is it worth the risk?
Yeah. Well, I mean, we've got enough ounces as it is to be a very, very compelling opportunity. I mean, our projects followed a similar growth compared to Silvercrest Las Chispas. Our maiden resource and their maiden resource were nearly identical. Same tonnage, same grade. Our second resource is actually bigger than their second resource was in 2019, and similar grade profile again. So they're a good example of how these things can grow over time and how quickly one can be advanced. One of the nice things about our project is that Nevada is a great place to be anyways. As silver producing countries go, it's like Mexico, Peru, China, Russia, all these places. But being in Nevada next to a town is obviously great. It stands out in the industry. But what makes our project stand out better is the fact it's private land. These are patented claims, meaning we don't have to deal with the federal government on anything. This is a project that could be advanced very quickly. The permitting risk is you'd see an expedited permitting process rather than having to jump through all the federal hoops as well. So, not only, you said, is it worth the risk? This is a project that's meaty enough, and the grade profile right now would attract both silver and gold companies. I mean, it's on an in situ metals basis, it's about 50-50 depending on the pricing assumptions you use. But because there's no permitting risk and because the jurisdiction's so good, I mean, every silver company in the world would want to have their hands on this. It can be quickly developed, and it's not going to be a massive capex that we envision. I mean, it's a pretty straightforward build, and the metallurgy's so well understood because it's a past producing district. I mean, the old timers did nearly 2 million ounces of gold and 200 million ounces of silver from 7.5 million tons of material just using stamp mills. So. Yeah, this is truly, I sleep like a baby from a project risk perspective.
Have you done any metallurgical work
on
the ore?
Yeah, we did 6 composites using bottle rolls, and the silver recoveries, just using those, were about 87% average. The gold was about 95% average, which is unusually high silver recoveries for an epithermal deposit like this. And we think there's still potential to ratchet up those recoveries, maybe looking at gravity or flotation. But right now it's straightforward. I mean, if we were to just go as is, I mean, we wouldn't have to do any concentrates. This isn't a polymetallic thing. We don't have to worry about concentrates. This would be a doré that we'd be looking at. So you'd be saving a lot of money on processing costs as compared to a lot of other comparable projects that are polymetallic, et cetera.
Gotcha. So you put out the resource in October. What are the next steps now, and what do you need to do to get to that next level?
Well, I mean, the ink hasn't even been cast on the resource, and we put out the headline numbers at the beginning of the month, and that was a barn burner. I think everyone's going to be looking forward to the submission of the full technical report, which should be the first couple of weeks in November. Here's what we're targeting. That's what the institutions will want to see, especially the technically driven ones, and certainly the corporates are going to be chomping at the bit. I've had some interesting calls with people already, and we're at an inflection point. Going into this, our ounces commanded the highest ounce in the ground valuation of any of the silver-rich deposits in the world. We're just over $1 an ounce. Our high-grade peers are trading for about 90 cents an ounce right now. Because we, even though we gapped up on the back of this resource slightly, we nearly tripled our ounces, meaning our ounce of the ground valuation has plummeted. Like, we're trading at a 50% discount to all of our high-grade peers right now. And that's the valuation gap that I see as, I'm trying to close just over the next month or two. We're taking the show on the road. This is the first conference I've been at since we came out with the headline numbers. The technical report's going to be filed shortly, and then, I'm going to be doing a conference in Toronto next week. I'm doing Zurich the week after. I'll be in Germany. just doing some road shows over there, and then finishing off in London. So, my focus for the next month or two is just close that valuation gap and see us trade in line at least with our peers. We should be commanding a premium given the jurisdiction and the fact we're the highest grade story out there. But that's compelling enough. And then next year we'll see what the market's like. Yeah. I think when we put our resource out in early October, it's prime tax loss season, and we're a great candidate. So we quadrupled our daily volume, our dollar volume last month when we put it out. So clearly there's lots of interest, but people are working in their own interest too and locking in some losses here. And I think they're going to jump back into the story early next year. And certainly now that the Fed's coming out a little bit more dovish than maybe people were anticipating, and the jobs report just this week came in a little weaker than people were anticipating. So we might be looking at a very good setup here, but for time being, we're just keeping our head down, getting out in front of the story, and taking the show on the road.
Is a PEA in the cards?
Well, we got a clear path to do one. I mean, at the ounces we've already delineated, we could probably go straight into one, but from a development point of view, it's a hell of a lot easier developing one big system than trying to develop like 3 different satellite deposits. So I think it's going to make sense to do one very targeted push on the drills, and this isn't risky drilling, it's infill. Like we know we have an anchor point here and an anchor point here, and we just need to fill in the gaps. We could do that in about 6 months, and then we think not only would it be low-hanging tons and ounces, but that would have a positive consequence for things like initial payback periods and IRR, and obviously adding more ounces would affect the NPV. So there's no point rushing into doing something, especially in this market. I think it's better just to do it the right way once, because having done the maiden resource and then following it, doing a big blowout a year and a half later, probably makes sense to take your time and actually get a true understanding of what you have before you put these reports out again.
Fantastic. I think that's the Tonopah West part.
Yeah.
There's a Tonopah North.
Yeah.
As well. Tell us a bit about that and the foray into lithium. What is that all about?
Yeah, well, listen, Tonopah is not just a very famous historic silver district, but it's emerging as like the Carlin trend of lithium deposits. You've got massive deposits. They're lithium claystones. There's a company next door to us called American Lithium, which has a $3 billion NPV asset they put out a PEA on. And effectively what it looks like is we've got silver and gold at depth, and at surface we've got big blankets of lithium claystone. So we were targeting gold and silver up on these BLM claims we added that directly abut our private claims down there last year, and we didn't hit any gold or silver, but we hit lithium in every drill hole. So we quickly got a partner involved. We had a lot of people beating down our door to do it, and they went out and did 11 drill holes with Core this year. Yeah, they've drilled out 7.2 square kilometers now at grades comparable to our next door neighbor, American Lithium. We'll see. I mean, it's a hell of a narrative to be in. But what we have in terms of our silver and gold resources is that's the real meal, and maybe the lithium could be the cherry on top at the end of dessert.
Fantastic, Andrew. Thank you so much for joining us here. It was a great update and great introduction back to Blackrock Silver here. Any next news? Like next news item is probably technical report filing?
Yeah, the technical report filing is going to be the big one. That's where going to be the jumping off point. That's when analysts can start changing their targets again. I think, having been at Beaver Creek just, a month ago, the feedback I was getting from the corporates down there was that this upcoming year is going to be the year of premium M&A. I think it's going to be one shoe to drop first. And, we've already got First Majestic in as a shareholder, but this caught a lot of people by surprise, and I wouldn't be surprised if you see some action maybe on a strategic front, or we'll see. But I think next year is going to be one to remember.
Fantastic. Good luck, Andrew. Thanks so much again for joining us here.
Thank you.
And to everybody else, thanks so much for tuning into the Gold Newsletter YouTube channel here. And thanks so much for joining us here in New Orleans. We'll be back with lots more updates, so stay tuned. Hit that subscribe button, smash the like button, of course, and let us know what you think. Thanks so much for tuning in. We'll be back.